So if you want to become wealthy, but more importantly, stay wealthy, it's going to require a lot of hard work, discipline, and investing early and often. In this video, I'm going to be breaking down how I track my family's income and expenses and treat it like a company would treat their balance sheet. The average Canadian makes $65,000 a year and has only $1,100 in savings. That's a savings rate of 1.17%. And here's a list of the G20 countries and their most recent savings rates. If you want to become wealthy, you're gonna have to save a hell of a lot more than 1.17% of your income. Real quick before we get into this video, you guys know the drill. Don't be a chooch. Hit the like button. A lot of effort and time goes into creating these videos, and I share all my resources for free. So please hit that like button to help out the almighty YouTube algorithm. And once again, I always appreciate your support. Thank you. So we track our income and expenses. When I say we, this is something that I do every single month. So I go into our bank accounts, print off our Visa statements usually, because we put all of our expenses on our Visa and then we pay it off every single month. That way we're able to collect the Aeroplan miles, and it's very easy this way to track our income and expenses. And then I just input all those values at the end of each month into the Excel spreadsheet, and then it spits out at the very bottom how much we should be putting into our investment account. And I want to really emphasize the difference between savings and investing, because if you're just saving your money and putting it in a bank account, that's not doing anything for you. Especially right now, the word inflation is just all over the place. We know that inflation is insanely high right now. This is post-COVID, and your purchasing power of your dollar gets weaker as each year progresses. So you want to make sure that you get your money invested. That way it's growing and compounding. Because if you're just keeping it, once again, in a savings account, savers are losers. So you've got to become an investor. So every single month we have a target of 40%, and we plan on increasing that. So we have a little bit more expenses this year coming up because we're finishing up our backyard. But as soon as we save up, because there's a few more contractors that we have left to pay for some work coming up in the spring. But as soon as that's done, then we want to just ramp up and aim to get our investing percentage above 50% each month. Now, what we're doing, these aren't just like arbitrary numbers that we're throwing out there. Basically, if you're able to invest on average like 30% should be the minimum if you really want to become financially free. And then obviously, the faster you can increase that, the faster you're going to work towards your goal. And the goal being FIRE, which is financial independence, retire early. Now, I don't like saying retire early. For me, I'm looking at this as replacing my active income with passive income, so that eventually I'm able to quit my 9-to-5 job and then focus on real estate investing and hopefully creating content full time. That would kind of be my goal. If I could quit my job today, that's what I would be doing, and that's where my energy and time would be focused on. So what you do is, once you started tracking your income and expenses, and the reason why I'm putting this video out is because it's the beginning of a new year, so it's a perfect time for you guys to start implementing this and tracking your income. You can find out what your gross expenses are for the year. And then using the FIRE, Financial Independence Retire Early formula, what you do is you take your gross expenses for the year, and then you multiply that number by 25, and whatever that comes up to, that's how much money you need to have invested in something safe, like the S&P 500. So you could buy that in a ETF, like a Vanguard fund that mirrors the S&P 500, so low cost ETF. And then you could do what's called the safe withdrawal rate of 4%, where you could safely withdraw and live off of that based on your expenses at that time of calculating it. So what you're going to find out by doing this every single month, you're going to be able to find areas where you're able to tighten up on your spending. So for me personally, I'll be straight up. Out of my wife and I'm definitely more of the spender. I am more of the bougie one in the relationship. So what I realized is, when my wife started doing little things like the grocery shopping at No Frills or Costco, our bills would be lower. So from now on, she just does the majority of the shopping. And just by doing simple things like that, it can actually save thousands on our expenses. And it's not like we notice a difference in this. And I'm not one of those people who's saying that being frugal is going to turn you into a multimillionaire. Like, you're definitely not going to be able to cut out buying coffees and then now all of a sudden you're going to be some rich person. You obviously have to increase your income and increase your investing rate if you want to start generating wealth. And you have to start becoming an owner of companies, an owner of businesses. And if you are a high income earner, once again, get that investing rate up every single month. So I'm going to be sharing my Excel document with you guys. All you have to do is go in the description below and you can download the Excel document that I use. You're going to have to tweak it, add in some formulas. Hopefully you have an idea on how to use Excel, because that's one thing that everyone lies about. Everyone on their resume puts that they're proficient in using Microsoft Excel. So this is going to be the true test. Let's see if you're proficient, because this is pretty simple. I have a lot of the formulas and stuff in there for you already. But like I said, you could just tweak it to suit your needs. And another thing that I wanted to bring up is that 40% investment rule for my wife and I, because we both work full-time 9-to-5 jobs. We're not entrepreneurs. So our income monthly is, it doesn't fluctuate a lot. So it's very easy for us to come up with these investing rules that might be more difficult if you're more of an entrepreneur and your income comes in like chunks or different periods of time. You're going to have to figure out what works for you based on your certain circumstances. But what we also do is any other income sources. So for example, YouTube, I make money every single month with ad revenue through Google AdSense. So all of that money gets invested every single month. And we also own a legal duplex rental property. Any cash flow that we get from that property gets reinvested every single month. We do strategies like the Smith maneuver, where you're able to convert non-tax deductible mortgage into a tax deductible mortgage. So all of these things are above and beyond our savings rate and or our investment rate off of our income. So I hope this video helped. I'm done rambling for now. Moral of the story, invest at least 30% of your income if you want to start becoming wealthy and start becoming an owner in businesses. And that doesn't mean you have to open up the business. You can do that through a beautiful thing called the stock market, where you own shares of companies. There's a million ways to do it, guys. Do your due diligence, make sure that you're investing wisely. Otherwise, it's just wasted time and energy. And as always, you have to have that long-term vision, and happy investing.